on Australia's business channel. This is Mediaweek.
Hello, welcome to the program. Ahead, the outlook for ad markets in 2012 amid more gloomy headlines about the outlook for the global economy. We'll look at the summer of sport and whether Nine wants more 2020 cricket on its schedule. We'll be joined by Brad McNamara, the Nine Network's executive producer of cricket. And does winning a Golden Globe help a show's ratings locally? All that and more coming up. But first, Jenny Craig has pulled out as the new major sponsor of Today FM's top-rating breakfast show, saying it badly misjudged public perception of Carl Sandilands. It comes after Carl's verbal attack on a journalist who reported criticisms of his TV show late last year. Some media agency bosses say that Southern Cross Austereo needs to dump Carl. The radio company's CEO says he's confident the show has been positively reset for 2012. Well, for more on all of this, we're joined by James Manning, the editor and publisher of Mediaweek, and Bob Goodge, the managing director of media agency Starcom Mediavest. Great to have you both here. Thank you so much. James, if we could start with you, we seem to be seeing a lot more of these social media-led boycotts or campaigns. Just take us through what's happened and why Jenny Craig pulled out so quickly. Yeah,
well, I guess we all know what happened last year regarding Kyle Sandilands and the sort of campaigns on Twitter that led to sort of some online petitions. But there was sort of his core audience didn't seem that upset, you know, and people who listened to that show, they were sort of comments, and we commented at the time, look, it's not a good thing to say, but it's sort of stuff you hear on that show every now and then. So yeah, again, it wasn't sort of that out of place on that program, but since then there's just been a real relentless campaign fired by Twitter, people on Facebook, you know, commenting. Again, but the core audience doesn't seem that upset. This week, Jenny Craig had signed on as a new sponsor this year. Somebody made a big deal about that the first day to highlight it. I think that they got a bit nervous. I would have thought they knew what they'd got into, Bob.
You would have thought so. Look, I think the reality is with Carl is that you know exactly what you're getting with Carl Sandilands, and you know, to a degree he probably loves all of this going on as well. It plays to his ego, and as you said, people are still listening, but there is two sides to this. The reality is the listenership may be going very strongly, but advertisers are very aware of the social outrage, if you like, about this as well. So they have to be sensitive to what people are saying as well. And this is the biggest difference. I think for the first time ever, there's now this big social awareness of what is being said and why people don't think they should be associated with Carl Sandilands. So clients now have to be very careful, take that into account. The reality is real time, people are saying things here and now, and clients have to react to that. And I think Jenny Craig reacted to that as well. But, you know, Austereo now have to decide whether they're going to stick with the fact that they've got someone who's still popular with their listeners, and how that's going to convert, how that's going to start impacting on their advertising dollars. And at the end of the day, advertising dollars are going to really ultimately make the decision, I think.
Yeah, I mean, if Kyle breaks that trust with his audience, which they don't think he has yet, well, then there will be consequences. Absolutely. But as Barry O'Brien told us at the end of last year, at that point it was cost Austereo more to take him off than it would to keep him there. Sure, you'll lose this much, but if he goes, you're going to lose that much.
Yeah, I think, you know, clients know what they're getting when they get Carl Sandilands. They will make a measured decision as to whether they want to be involved with him or not.
So I think it probably has affected him a little bit too. I mean, he wasn't on air Thursday this week. He has been a little unwell, but I wouldn't be surprised if it was getting to him, you know. It was just...
With a man with an ego like he's got, he's going to be taking that into consideration. But the reality is, as I say, he's not a stupid man. He knows what he's got to do as far as making that show successful. And you know, maybe we will see a very different style of show next year. Who knows?
So, I mean, Matt Baxter from Universal McCann telling the Australians today, look, you know, Southern Cross Austereo should dump Carl. You don't agree?
Well, I think it's up to them. I'm very uncomfortable giving that sort of advice.
It's not for me.
It's not just Kyle. There's a whole army of
when you draw the line, you know, Carl's not the only jock, you know, who sort of gets involved in that sort of things. Matt says what he says. Yep. He's entitled to that opinion.
All right, I want to also ask you about some other moves in terms of radio. And James, we did see Nova Brisbane this week drop Camilla, and this was after some audience research too.
Apparently, yeah. I mean, there was a big story last year that they poached one of the stars of B105 Breakfast to go across to their breakfast show because they were doing some internal. Michelle Laurie had been their sort of female anchor or female talent on their breakfast show. She moved to a network role in Drive, so they had a hole to fill. So they poached what they thought was the best from the opposition. As often happens in media, the brand can be bigger than the personality, and it seems to be the case here. She didn't transfer well, and so they've just let her go.
It is
or they'll move her elsewhere in the company, I think.
Very competitive market, obviously. I mean, what do you think of this, Bob, you know, seeing firms or radio media companies jump on research so quickly, or particularly radios?
Well, but I think this is the thing, you know, the fact is that this day and age, you know, it's possible to get feedback straight away. So people are reacting to it, and as I say, to a certain degree with Carl Sandlands, how people are reacting to that is a measure of people having this instant sort of opportunity to have their say. But the truth is, breakfast is extremely competitive in radio. It takes time for people to bed in and actually get things working, and it will be a shame if people do start having knee-jerk reactions all the time and not give people the opportunity to bed in and actually start building up a new following. So yeah, it's a fine line these days between having to feel that you've got to get things right straight away, but equally being able to give, you know, people the opportunity to.
You feel for Camilla, but I think it's good. Radio, perhaps in the past, has maybe been could be accused of being a little too slow sometimes. Sometimes you look at ratings that don't change for a long time and think, gee, maybe it's time for a change.
Ratings haven't changed for years, have they, on radio? Come on, it's very competitive, and competition and change within radio isn't a bad thing anyway. No. But yeah, we'll see.
And of course, radio ratings have started this week. Just wanted to ask you about one other story that I guess will be one of the big ones for this year, and that's Fairfax Radio. Got a new CEO in charge there, Adam Lang. Was it a surprise, I guess, for you seeing him move from FM to AM? And what do you think the challenges are in terms of what you want to see at Fairfax?
Well, look, it's very different, isn't it? But I think, you know, the challenge for AM radio is very much it's an old audience, and how they sort of, I guess, start evolving the audience and sort of, you know, embracing the new opportunities which come with digital and everything else as well. So the challenge there, I think, for him is to make it relevant for today's marketplace. There's lots of issues as far as 2UE is concerned, and that's not going to go away. And again, if ever there's a situation where it's going to take time to sort of re-establish a brand, that's a classic example there. So it will be a big challenge, but at the end of the day, I'm sure it's something that he's very excited to be taking on, so yeah. And
the disciplines too, from a successful FM to successful AM, a lot of those same rules are going to apply, aren't you? Okay, how did we get to the number one? How do we get compelling content? But you just got to.
But you know, it's this wonderful thing about number one and what that means. You know, the reality is advertisers don't buy total audiences, so it's about being smarter and understanding who it is you're actually trying to attract, and make sure that you've got a very strong story against who your core target audience is going to be. So I think, you know, that's where he's got to be smarter in identifying what it is he wants the brands to be.
Just looking at overall advertising spending, I mean, we've had some SMI data out this week showing that it was just a touch weaker in 2011 than it was in 2010. What's your outlook for 2012? Because we've had so many gloomy headlines about what's going on, you know, the GFC Mark II's
well, the truth is, you know, how long's a piece of string? It's incredibly hard for us to sit here at this stage saying what we think it's going to be, but Starcom every year releases the Media Futures report, which is the only report that actually talks to advertisers and the media about what their expectations are. That's released on the 30th of January, so I haven't got all the numbers now. But what you are going to see, I think, looking around at the moment, the average numbers seem to be anywhere between 2 and 5% as far as the increase is concerned. That's probably not a million miles away from where we might say it's going to come out. The truth is, it is going to vary. There is a lot of, you know, negative news coming out in the marketplace at the moment. Euro is in a terrible state. I think, you know, Australia's doing a good job of trying to talk itself down as well. So it will be dependent, I think, on how the first quarter goes and how, you know, what does happen overseas. But it's going to be a tough year. I don't think we can deny it. You know, certain media will do better than others. But as I say, I think what we're seeing is that there's probably slightly more optimism from advertisers than the media at the moment, which may not be too surprising. But again, it's nice that people are starting off trying to be optimistic about things. But it's going to be a tough year, that's for sure.
Now, you've recently back from leave. You were over in the UK for a few weeks. The Leveson inquiry is still underway there.
Yeah.
It's creating some big headlines. It's disappeared out of the news a bit here locally, but there's still a big story in the UK.
It is, and I think to a certain degree it's probably a bigger news within the media than it is with the public. But the reality is it is going to have an impact on what happens down the line as far as, you know, laws and everything are concerned. I think, you know, it's opened a can of worms as far as, you know, what's coming out. I mean, probably not too surprising in some instances, but it will. I think it's going to make people stop and think about what they can and what's acceptable and what's not acceptable as far as reporting is concerned. And to a certain degree, I think the public have just, a little bit over what's happened. There's a lot of bigger things to worry about as far as, general economic gloom and doom, etc., etc. But I think the media will continue to be obsessed with what comes out of it because obviously they want to protect themselves, so, yeah.
Just wanted to ask you too about the TV market in particular, and we're seeing obviously a renewed strategy from 10 there as well. A much more competitive free-to-air TV market. Is that a good thing for you?
It's absolutely a good thing, and I think if you speak to 7 or 9 or anybody else, they want a competitive market as well. So a strong Channel 10 is good for everybody. So, I think we're very excited.
Why do 7 or 9 want that?
Well, because at the end of the day, I think competition's a good thing. You're only as strong. Absolutely, you're only as strong as competition. And if one person's allowed to be weak, and that's going to adjust potentially the way the market is priced, etc., it's not going to do anybody any favours either. So, I think it's good, it's good to have James Warburton back on the scene. He's, if anyone's going to make a change, James will. And as I say, I think it's good. And I should also say Channel 10 is one of my clients, so I'm very excited by what's potentially going to be happening down there. But it is for the market as a whole, it's a good thing to have 3 strong networks and a strong STV category as well. So. Yeah.
Just finally, very quickly too, the overall sector, do you see the mix changing much in terms of your client spending then this year and what you're going to do for them? I mean, digital obviously tipped for more growth.
Digital is going to continue to grow, but again, it's that definition. Everything is digital these days. So how many money is spent across digital is probably how it's going to evolve as well. I think we see that mobile is potentially online mobile is going to grow a great deal this year. I think all clients have recognised that search has to be on the schedule, but they don't necessarily have a great understanding still as to how much they should be spending in that space, but it has to be there. So that's going to continue to grow. So digital, yes, important is going to grow all the time as far as that's concerned. The free-to-air channels, digital channels, again, are going to continue to grow, I think, as far as audience and revenue opportunities for the network, so that's going to be a big space as well. So, overall, I think the splits aren't going to change a great deal other than people looking at where that digital spend is going across all different sort of
It's been great to have you on the program.
It's great to be here.
Thank you so much,
Thank
Bob.
you. Cheers.
Bob Gooch there from Starcom MediaVest. Now, for a check on the media sector's performance on the share market this week, here's Chris Weston from IG Markets.
Yeah, good afternoon, Bridie. It's been a pretty interesting week. Most of the stocks are doing actually very well, which is great to see. When we've got Southern Cross Media up 6.3%, Seven West Media up about 3%. We've got News Corp continuing its stellar run up 2.1%, and Fairfax still in positive territory over the last 5 days or so, up 0.6%. 10's still the best performer on the year. It's up about 7.2%, and I think it's relatively flat. And you've got Ozstar and APN in marginally negative territory. I think Ozstar's still a very interesting one. You've got to keep your eyes peeled on this stock. It's going to be a very interesting next few weeks. We did have Rob Sims coming out from the ACCC suggesting he's not going to commit to any kind of final ruling before the deadline, which is on the 3rd of February. And then we got the minority shareholders vote, which comes on February the 17th. So that's going to be the date that everyone's going to be looking at, February the 3rd, and whether or not they get that deal over the line, because certainly the minority shareholders will be pretty keen to get that away, given the independent adjudicators suggest there's good value at that current bid. News Corp continues to be a very strong stock. I talked about it for the last few weeks or so, suggesting this is perhaps one of the top picks to go with. It's broken out quite clearly on the charts. It's in a very strong uptrend at the moment, and it's begging to try and break the $20 mark. We did see Merrill Lynch coming out this week and upgrading the stock for forward EPS. They've got a price target over a 12-month now of about $25. So they're one of the more optimistic brokers there. They've both got the US listing and the Australian listing, suggesting good grades there as well. They've pushed their second quarter revenue and EBIT to be about 5% and 14% growth respectively. Now, whilst they are seeing slightly weaker publishing side of things, they're expecting to see a slightly stronger earnings picture from their television, film and cable divisions. So they are saying the stock is very sound fundamentally from their core asset growth, but some of the other less core side of things is potentially going to have a turnaround story further down the line. On 13.8 times current earnings, or forward earnings should I say, and about 18% EPS growth, the stock still looks reasonably attractive. And I think what's quite interesting as well is we did see the SMI data earlier in the week. These are the ad market bookings coming through. The December ad market bookings are up about 0.2% year on year. If you actually look at the first half ad spend for 2012, it's actually pretty weak. We saw it up 1.4% year on year. If you actually look at the free-to-air Metro TV side of things, that was down 8.2%, radio down 7.7%. They made up about 66% of that. Now, that did feed into some pretty weak advertising spend bookings for some of our stocks. I mean, 10, they saw those bookings down 10%, Fairfax down, 10 down 11%, Fairfax down 10%, 7 West Media down about 3% or so. So we are going to need a very, very strong second half from the ad spend to try and get it up to where the consensus was for the full year, suggesting there could be some headwinds for some of these stocks that rely so heavily on advertising spend going into 2012.
Coming up on Media Week, dissecting the summer of sport ratings, we'll be joined by Brad McNamara, executive producer of cricket at the Nine Network.